Hello friends, today we will discuss VF Corporation. VF Corporation is a leading clothing marketer in the United States and many international markets. VF has a broad customer base and its products are sold through leading specialty stores, department stores, retail chains and discount stores worldwide. As part of its growing plan, the company actively invests in building its brand and expanding their global presence. For example, in 2006, VF made two new acquisitions, Majestic Athletic and Eagle Creek Incorporation. Additionally, the company is actively developing its direct-to-consumer business through its own retail stores, planning to add approximately 75 to 100 stores annually. As of 2008, VF Corporation owned a portfolio of over 30 brands designed for various consumer needs and aspirations. Additionally, VF is not dependent on any single customer or distribution channel, as its products are sold through approximately 47,000 retail points in various segments. Furthermore, VF has a flexible global supply chain that allows it to procure high-quality products at competitive prices from around the world. The company has a developed inventory and production management system that enables it to obtain the necessary products at the right time. Here are the biggest VF brands in my opinion: The North Face, Vans, Timberland, Wrangell, Lee, Nautica, Kipling, Seven for All Mankind, Splendid, and Alamos. VF is organized into business groups called coalitions. These are the 5 such coalitions: Outdoor and Action Sports, Jeanswear Coalition, sells denim and casual wear worldwide through brands such as Wrangell and Lee. Imagewear Coalition provides workwear and branded athletic apparel through brands such as Redcap, Bulwark, and Majestic. Sportswear Coalition includes brands Nautica and Kipling, and contemporary brands serve as the main segments for financial reporting. Each coalition manages a portfolio of brands tailored to specific market segments and demographics, with financial, administrative, and systemic support from VF's central functions. By the end of 2015, VF received approximately 70% of its revenue from Americas region, 20% from Europe, and 10% from the Asia-Pacific region. The Outdoor and Action Sports Coalition is the VF's largest and faster-growing business segment. Among the most notable brands in this coalition are the North Face, Vans, and Timberland. E-commerce is the fastest-growing channel, accounting for approximately 16% of total direct consumer sales in 2015. Approximately 23% of production is done in VF's own manufacturer facilities, with the rest sourced from independent contractors. In 2015, VF opened 186 stores, bringing the total number of VF-owned stores to 1,520 by the end of 2015. Direct consumer revenues accounted for 27% of VF's total revenues in 2015, compared to 26% in 2014. As of 2023, a significant portion of VF's total revenue, approximately 48%, is generated from markets outside the United States. VF's international businesses operate in functional currencies other than US dollar. Fluctuation in currency exchange rates could harm VF's financial health, performance, and cash flow. In total, they operate 21 owned or leased distribution centers, primarily in the United States as well in the Czech Republic, the United Kingdom, the Netherlands, China, Canada, Mexico, Belgium, Israel, and France. Additionally, VF leases a distribution center in Ontario, California, which will be launched in the early period of fiscal 2024 and will become VF's largest distribution center. In addition to the main properties described above, they lease many offices worldwide for sales and administrative purposes. They currently operate 1,265 retail stores in the Americas, Europe, and Asia-Pacific region. It's also noted that due to the ongoing conflict in Ukraine, all of their own retail stores in Russia were permanently closed. Let's now look at the financial indicators. Their assets are growing year on year, and they have more than doubled over the last 10 years, but their debt has increased 4 times over the same period. I can say that I am impressed with the earnings of this company, because they are almost at the level of their assets. But imagine, from almost $12 billion of revenue, only $1 billion of net profit. This suggests that this business is not very profitable. Also, don't be fooled by its annual annual revenues, they recorded a profit, but all past quarters they recorded losses. This can only mean that they sold their part of the business, because in 2015 there were approximately 1500 of their stores, and now it's only 1200. This happened because of the coronavirus. Currently, the share price is approximately $16. Its capitalization is estimated at 6 billion, which according to my calculation is overpriced by 2 times. If you subtract all the debt that the company has and its assets, then only about 3 billion will remain. My final rating for this company is 2 out of 10. I don't believe that this business will get better. Yes, they have cool brands, but that's all, which is why I will not buy shares of this company. If I briefly describe the situation of this company, it looks like this. About 80% of them are debt. After the coronavirus, it became unprofitable due to the closure of many stores that sold its products. It still pays dividends when it incurred losses, driving it further into debt. To cover all these costs, they sell a share of their business. In addition, the company is overvalued twice. I don't advise anyone to buy this business. If you liked the video, subscribe to the channel.